I'm Johnny Fernandez, anchor at FinTech TV, and you're watching Taking Stock.
Two minutes ago, here into the closing bell. It is everyone's favorite time of day, the end of the day, also everyone's favorite day of the week. We are here at Friday, and in comes the man himself, the Einstein of Wall Street, the great Peter Tuchman, right on time.
Right on time.
Nixon 5, thank you for being here.
Nixon
All-time
5,
highs for the market. Investors shaking off or maybe seeing what they want to in a more disappointing than expecting jobs report. What did you see this morning?
So listen, yesterday was jobless claims, and jobless claims numbers can be a little mushy. There's, it's not as clear, right? Because people have been out of work for a while. That's not part of that number. So the unemployment numbers today really kind of clarified that things are better. And this is all about whether we're going to have a 50% chance of raising interest rates or 50% chance of not, or raising them or lowering them. And that's the question. Inflation being a sticky thing that the Federal Reserve is going to do. I think this gave them a little bit of sense that maybe there's probably not going to be a change in interest rates, and that's okay. Jobless claims numbers were solid. They like that. We've had great earnings. 86% of the S&P have beat. Even though the quarter we're talking about, we were at war, or if you want to call it that, and they still beat. So I think it's irrational enthusiasm. There's enthusiasm. It's not even irrational. And then, it's the end of the week. We've had a wild week. That big Tuesday, 2 days of high openings, a little bit of a weak fade. And now this is a great way to end the week.
We got some inflation prints next week as well. Thank you for being here. We'll talk to you again soon.
Nixon 5.
Nixon's now for the closing bell. More Taking Stock after this. There you go. That's awesome. I guess it's a way cooler visual than looking at me here on the camera. Your final tail of the tape on this Friday, August 7th, as the Hong Kong Dragon Boat Festival of New York rings the closing bell. They will also join us here on the broadcast in just a bit. The S&P 500, hey now, in positive territory, 0.6%. The Dow started the morning very briefly in negative territory. It did not finish that way, up about 0.3. The New York Stock Exchange Composite Index settling in at a new all-time high close, up about 0.5%. And the small caps, as to be expected for a Friday like today, where everything else is ripping, the small caps up 1.1%. Salesforce, Honeywell, Nvidia, the best of the bunch in the Dow. Your Dow laggards, Visa, Caterpillar, and Chevron. Over in the Mag 7, Tesla, the big outperformer, up almost 3% into the closing auction. We are seeing downward pressure from Alphabet. Not quite a Mag 7 stock, but we'd like to give you an update on SpaceX, up 14% as of a few minutes ago. We'll talk a lot more about that stock coming up in the next half hour. Let's bring in Rebecca Walser. She is founder, CEO, Chief Investment Officer at Walser Wealth Management. Nice to see you again. Thank you for taking some time.
Thanks for having me on Friday at the close on an all-time record. I love it.
An all-time high, but perhaps some concerning information in the jobs data.
For
so
sure.
when we saw this far lighter than expected print and unemployment coming down,
that's right.
There are different reasons for unemployment to fall down to 4.1%.
Right.
What did you make of the July jobs print, and what did you make of the market's reaction today?
Well, obviously the print was a shocker. We expected to have, we had an estimate, one estimate was as high as 115. 80, 85 was the consensus. To lose 23,000, that was quite a shocker, JD. Also to get a reprint on both June and May, to see another 103,000 jobs lost from those 2 months. Also, so this is a very negative report, which is why the market reacted so positively. It's that old phrase we have to go back to during the Biden administration. Bad news is good news. They think that this means the Fed is going to be accommodative. This gives Walsh a lot of breathing room. He looks like a hero and a genius for what he did last week, which is to quiet the noise, not listen to anybody pressuring him, and to just say, let's take our time, let's let the market do what the market's going to do. And he was right. He was right to wait. And so I think that's why the jobs report had such an impact today on the equity side.
The stock market is not the economy, but there is a close correlation to the question of the U.S. economy right now, Rebecca. How concerned are you, or how concerned should investors be about the economy as we roll forward into the fall months?
I mean, I think that geopolitically there's a lot of concerns, and I think not only from the Iranian situation, which is what everyone jumps to, and of course that is a concern, and if we can't get stability on a resolution, that's the biggest issue. Is like, it's great to hear that we might have another 60 days, but is it going to actually be stable 60 days? Beyond just the Middle East and kind of crude issues and those things, we really have to look at the geopolitical nature of the global, on currency. We've got a lot of blockchain developments that are happening in Japan. We've got a lot of developments that are happening around the world. And right now, the Senate just recessed today, JD, did not pass the Clarity Act. And so you've got a lot of stablecoin issuers. You've got a lot of people that want to get into this market. And without the clarity of regulation, they're not going to do that. That puts the U.S. on the sidelines, and we cannot have that. We have to be the innovative capital of the world. And so this has got to get fixed immediately.
And as of today, we're only 88 days out from the November midterms. It becomes that much more difficult for members of Congress to try and come together, dare I say, have a bit of bipartisanship on some of these things. It becomes kind of a rare phenomenon in midterm season. Let me get your take on semiconductors, hyperscalers. They've been under pressure for the most part as of late. Do you view this as a short-term shakeout or something a bit more going on here?
I think the semiconductors have a long runway. We have true backlogs. We have true orders. The only way that demand destruction could possibly change is if you see something that, like, for example, Apple pressuring this administration to allow them to use Chinese semiconductors in their products. That's a big Apple Micron type of fight. So, you know, I believe that the CapEx and all of these things related to data center build-outs, semiconductors, and all of these things, we're going to have that runway. You can see CapEx spending really, JD, run through even 2028. So we know that the demand will be there unless and until you get a China moonshot or a Kimi 3 or something that comes along and say, oh, can they do this faster, better, cheaper? And if the answer is yes, why would we build all these data centers in the United States? So that problem has to get resolved as well.
You and I are going to take, before we wrap up, a quick look here at Treasury yields. Nice to see them down for the day, but that has not been the tail of the tape throughout much of this week. What does that mean for potential further pressure on equities if we continue to see yields be a bit stubborn to the upside?
You're going to see a rotation. People want yield, and so if they have to chase, you know, what's going on in the equity market to get what they need, they'll do it, but they'd like to see the ability to obviously leverage the bond market. The other thing that's happening in JD is the demand for capital. Look at all of these. Look at Google, 25 billion. It was oversubscribed to 150 billion, 110 billion they've written just this year. We're seeing massive debt being written that we've never seen before. We have to get used to it and accept this is the new normal because this is how much capital it takes to do this fourth industrial revolution, to capitalize it.
Rebecca, really nice to see you again. Thank you so much for taking the time.
So
Please
much.
come back and see
Absolutely,
us in our Taking Stock
will.
and kind of enjoy your weekend.
Thank you, you too.
Skylar will grab your mic. Bobby, you and I heard this way. As of last night, the NFL season is officially back. The Hall of Fame game in beautiful Canton, Ohio. That last-second go-ahead touchdown by the Carolina Panthers over the Arizona Cardinals. Here are the Polymarket odds as participants try and figure out who will win the upcoming Super Bowl. It's never too early to talk NFL here. The odds-on favorite to win, the LA Rams, 15%. The Josh Allen-led Buffalo Bills, 8%. Baltimore, Kansas City, Seattle, the defending champion, coming up next. Pardon me here, gentlemen, at 7%. Thank you very much. Teams like the Dallas Cowboys, come on, the LA Chargers and the Philadelphia Eagles all clocking in at 5% odds. Most of the league then tied down at the very bottom of the pack. That includes my very own New York Football Giants at 1%. Super Bowl 61 will be held February 14th, 2027 at SoFi Stadium. Here's a look at one of the best performers in the S&P 500 today here, Bobby. It is Uber. Shares up just about 6.5%, trading right about $75 a share. If you look at the stock chart year to date, it's now trading back up to this very stubborn resistance level that it has been hitting since early February. The company just reported earnings on Wednesday, a beat on earnings, but a slight miss on revenue side. Shares up today, but still underwater about 8% since the start of 2026. Recently on the J.D. Durkin Show, I sat down with the great Robert Krook. He is founder of Silly Bands and co-host of the Rich Habits podcast. We talked entrepreneurship, building businesses, and the mindset every investor should have. Take a look. Multiple businesses, Robert Krook, from the ground up. One lesson in entrepreneurship that you wish you had learned sooner in your career.
Yeah, I think for everyone watching and listening is to take the risk early. So many people want to go the route of go to college, get the job, get the white picket fence, get the dog, get the 2 kids, and they sidestep the most important thing, and that is taking the risk early. Because I see it all the time where people are like, man, I really wanted to do this, but I had to get the job. And I think that's probably the biggest lesson for me, and probably the biggest cause of my long-term success is I was very risk on early in my 20s. Even though I was in school, even though I had a job in finance at a car dealership, I was taking the risks. I used my weekends and my nights exactly like we talk about now to build the dream while still having the job to pay for the dream. So I would say taking the risk early would be the number one thing that anyone listening should really consider. Even if you're in your 30s and 40s or even 50s, it's still not too late to take the risk. And I'm not saying like some of the fake gurus, quit your job, quit everything and just go all in. Build the dream on the side of what pays the bills so you can eat.
The Rich Habits podcast has grown into one of the most important personal finance brands anywhere online. Talk to me about the main factors behind its growth and behind your success there, Robert.
Yeah, I would say the biggest reason the Rich Habits podcast and the Rich Habits Network aligns with hundreds of thousands of people every week is because we take what seems to be these big, scary topics and we break them down in bite-sized chunks so the everyday person realizes they too can build wealth if they follow these things that we talk about. Because so much information that's online every single day that JD, you and I see and everyone sees is it's all created to make it seem scary because someone wants to sell a course or a Telegram group or something else. We want people to believe, because in my opinion, 70-80% of the reason most people don't build financial freedom is mindset, not how much money they make. So I think the key to success for the Rich Habits podcast and the Rich Habits Network is breaking down the tough topics in bite-sized chunks and letting people realize this too is possible for them.
Robert, I'm going to ask you a question that I also asked Austin Hankwitz when he was generous enough to do the show a couple months ago. What is the top investment question that you most get asked in your DMs?
How do I analyze a stock, and how does it always seem like I'm ahead of the masses in these convictions that I talk about online? You know, whatever secular growth trend that I believe will scale next, I think is probably the number one biggest question I get. And then I would say secondarily, and probably more important, because I don't believe most people starting out in investing should even be considering stock picking or trying to figure that out in the beginning. You know very well that in the Rich Habits podcast, our biggest part of our message, the hill we live on, is getting people to understand, keep it simple, build your base to that first 100K, 200K through ETFs. Keep it super simple, because that way you're not trying to do stock picking or take a tip on a crypto or some new penny stock. You are just doing the boring stuff like everyone has done for decades to build the base first so you're making money while you sleep. And then down the road, start thinking a little bit more deeply about secular growth trends, about having, you know, how big of a portion of your portfolio should be in these higher beta stock picks and sectors. So that's it for me, is getting people to lay the groundwork to build that base.
Welcome back to the show. You're watching a very special Friday edition of Taking Stock, live from the trading floor of the Big Board. Joining me now, Sebastian Badeau is the EVP of Enterprise at Ledger. Nice to see you here today.
Thanks for having me.
All right, we're going to talk about this wild story that I don't know how many of our viewers are caught up with, but I think it's important for context. Walk us through what happened with what is known as Cold Card. What happened and what went wrong?
What happened is that a vulnerability was found in their software, and it was in 30 minutes, over 1,000 Bitcoins were hacked from users that were using their technology. If you want to think about it, the way that it's done is that when people have a cold card, they're going to generate random passwords, and the issue was that there was a vulnerability back from 2021, which meant that the person exploited it. And then once he was able to exploit it, he was able to find the passwords of all these people that got hacked, and everything was drained in less than half an hour.
Now, people will hear this and they say, well, I thought this is supposed to be the safe component, right? You're not supposed to know who kind of owns the wallets, et cetera. Do you view this, or based on what we know so far, is it negligence? Is it inherent tech error? What do we know?
It's a tech error. I mean, the best analogy I can give you is that it's like the way to create the keys would be a roll of the dice, but here the die was loaded. So if the die is loaded, you're able to figure out what the way that the entropy is done. If the die is correct, then it remains the best way to safeguard your assets. So it's not about the technology itself, it's about an issue in the way that they were giving out the passwords.
Appreciate the context. Perhaps most importantly, as far as you're concerned, if I'm not mistaken, Ledger was not impacted. What is different about the way that you and your team inherently go about your own security architecture?
I mean, I think, as market leaders, there are three things that we do. Number one, the way that the passwords are generated, the keys are generated, are inside the hardware. So there's no way to fake it out. The second thing is that we create all these audit trails to be able to look at the way that they are given. And then the third thing is that we have a hacker lab that actually tries to break through our technology. A couple of months ago, they were able to hack through Android phones. Over a quarter of the world's Android phones could have been hacked that way. They're probably the best hackers in the world, and so they keep us safe and they keep our users safe. Never has $1 been taken or 1 Bitcoin been taken from a Ledger device in the 10 years of our history.
Should this incident fundamentally change the way that people are thinking about self-custody or the way that we are talking about self-custody as the underlying technology continues to evolve?
It remains the best way and the most secure way to safeguard your assets. You just have to be careful the way that you do it and use the best technology, which is Ledger.
Could high-profile hacks like this, you think, push more investors towards things like Bitcoin ETFs or other major custody solutions?
I mean, the issue is that, if you give your keys to somebody else, then the risk is with the other person. The best way to safeguard your keys is for you to own them. The one thing is that you don't want to have one single point of failure, so one person. You want to have potentially what we call multi-sig, so multiple signatures, not just one. And then what we see today is that all the big financial institutions, all the banks are going into stablecoin, tokenized assets, et cetera, and they know how to do security the right way, and they're doing it with people that they can trust, such as Ledger.
Sebastien Baudot, EVP of Enterprise at Ledger. I'm out of time, but please come back on the broadcast soon. We've got a lot more to talk about.
Absolutely.
Take good care, enjoy your weekend. Don't go away, folks. A lot more Taking Stock coming up right after this. Welcome back to the show. Joining me now down here live on the trading floor of the New York Stock Exchange, Henry Wan, chairman of the Hong Kong Dragon Boat Festival, and Maisie Ho, director and head of office at the Hong Kong Economic and Trade Office right here in New York. Very grateful for both your times. Thank you for being here today.
Hi, how are you?
Henry, I'm doing well, thank you. Henry, my first question for you, for people who have never been, what actually is the Hong Kong Dragon Boat Festival in New York? How did this whole thing begin?
I'm glad that you asked. The Hong Kong Dragon Boat Festival in New York actually started in 1991 by Macy's office, actually. And then subsequently, because it's so well liked and so popular, then they turn it over to a non-profit organization, which I'm the chair of, and we've been from 1995, and we have the festival from 1991 up to now. We have exciting Dragon Boat racing. We have the stage performance of the East and West song and dance and Shaolin martial art and Japanese Kudo. And we have a lot of the art and craft tent, and we have food court, including lobster roll and Hong Kong street food. So it's a lot of things going on, and it's free.
Okay, one follow-up for you. What is your favorite thing to eat while you're there?
Everything that tastes good.
Everything that tastes good, perfect. Maisie, over to you. Your organization helped found the festival all these decades ago. Why has it remained such an important part of your ongoing mission?
Yes, first of all, for those who don't know what Dragon Boat is, it is one of the fastest growing modern day water team sports that is getting a lot of momentum around the world, and Hong Kong is great place to be because we are the birthplace of modern day Dragon Boat racing that brought this 2,000-year tradition into the modern day sports. And what makes this sport so unique is the unity, the teamwork, and the synchronization that happens on the water, and the satisfaction of that competition is none to compare.
Maisie, I'll stick with you for the next one. How does the festival help strengthen the relationship between Hong Kong and right here in New York City?
Yes, for our office, our role is always to foster the bilateral relations between Hong Kong and the US East. And Dragon Boat is so unique in a way that it links the cultural side of both places through competitive sports. So if you are there this weekend at the festival, you can feel the excitement and the fun of it that connects the people of two places so seamlessly.
Henry, let me get your take. What makes this year's festival so special, and why is Dragon Boat racing so deeply connected to Hong Kong itself?
Well, first of all, the Hong Kong Economic Trade Office started the festival by using the authentic teakwood Dragon Boat. Subsequently, of course, now we move on to the fiberglass. So that's a connection between New York and Hong Kong. And also a lot of the team that participate in our event are a lot of actually, most of them are your listed member. And they all have corporate headquarters in Hong Kong. So that is the connection between the Hong Kong and New York as well.
That's amazing. Maisie, Henry, congratulations to you both. Thank you for ringing the closing bell with us here at the New York Stock Exchange. Have a great time, and thanks for joining the broadcast.
Thank you very much.
Take good care. Of course, don't go away. A lot more Taking Stock coming up on this Friday right after this. Welcome back to the show. Take a look at this package from Money 2020's very own Scarlett Sieber, a whole new edition of Jargon Translator, where she puts wonky, complicated financial jargon into language that anyone can understand. Take a look.
I'm Scarlett Sieber from Money 2020, and this is Jargon Translator. Today's term is control environment. A control environment is a system of rules, processes, and accountability that ensures financial information is accurate and that mistakes get caught before they compound. It's not one control, it's the environment all around of them. Who can approve payments? Who can change numbers? Who signs off? And most importantly, who gets blamed? This concept became central after corporate scandals made one thing painfully clear. Trust doesn't scale without structure. A strong control environment doesn't prevent errors, it makes them visible. And that is the point. Control environments exist to reduce fraud, prevent misstatement, create audibility, make accountability explicit, and once they're in place, they become permanent. Fast forward to today, as finance becomes more automated and more software-driven, control environments are increasingly embedded into systems, not people. That's why governance software, audit trails, and workflow controls matter more than ever. Control environments aren't about bureaucracy, they're about credibility. Because in finance, the fastest way to lose trust is to look surprised by your own numbers. And that is your Jargon Translated. If there's a governance term you want unpacked without the legalese, put it in the comments and it might just make the cut. In the meantime, back over to you.
Welcome back to the show. Before we wrap up this Friday edition of Taking Stock here at the New York Stock Exchange, we'll get you quickly caught up on a few of the big market-moving events to expect next week here on the Wall Street calendar. We do have some key inflation prints. We get the latest figures for CPI inflation on Wednesday and PPI, also known as wholesale inflation, on Thursday. We'll also get quarterly results from a handful of key names, including Berkshire Hathaway on Monday. We'll get Rocket Lab's numbers, quantum computing, CoreWeave, Applied Materials, and many others. Your final tail of the tape on this Friday, August 7th, the S&P 500 in the green, 0.6%. The Dow, sorry, Bobby, I got to take a look, up 0.3%. The New York Stock Exchange Composite Index settling in at an all-time high, up 0.5%. And the small caps, the Russell 2000, the best of the bunch on this Friday, up 1.1%. The July jobs report, a negative print of minus 23,000, expectations of 83,000. That and much more sets the stage for a jam-packed edition of Taking Stock all next week, and lots of market-moving activity that you do not want to miss. Thank you for watching this Friday edition of the show and watching all week long. Enjoy your weekend. We'll see you again Monday from the New York Stock Exchange.